You're probably watching this video because you want to know if you should buy your Dubai apartments using mortgage or cash. Which one is going to make you more money? And you want to know the advantages and disadvantages with each model. So guys, I'm breaking down everything in detail. I've compared 6 different investment paths using mortgage, short-term rentals, long-term rentals. Which one is going to make you more money? The risks and the advantages, with each model. Number 1, 2, 3, 4, 5, 6. And I've shown you the next 30 years. So no one on YouTube is going to give you this, okay? So I want you to know, the entire details, how much, each model can make you over the long run, so you can make an informed decision. And guys, for those of you that do not know me, my name is Arman. Our family owns over $40 million in equity in real estate, and our main vehicle, to fund these real estate investments has been commodity trading. So we buy commodities from one country, sell in another country, and we've been doing it for over 35 years. So the majority of our portfolio is raw land. We bought land for growth reasons, warehouse areas, and we also have a commercial building and a mixture of residential and commercial units separately. Okay, and this is what led me to kind of Dubai. So we started investing in Dubai, and we bought residential apartments, and I kind of became obsessed with the rental income in Dubai because it's much higher than the countries I've seen, right? So I don't know about your country, but rental income in Dubai has been something very interesting to me. It's a pretty good market, I would say, for rentals. Anyway, so I'm going to show you exactly what are the terms for this kind of investment philosophy. So guys, every investor, so I've broken down investor number 1, 2, 3, 4, 5, 6, right? These are different investment paths. Every investment path starts with 5 million dirhams, right? If you have less, let's say 2 million dirhams, you can do the calculation, with the same method, right? But for simplicity's sake, I'm just calculating 5 million dirhams as a starting point, so you can have an understanding of what you should do. Anyway, investor number 1, 2, 3, 4, 5, and 6. So here's the thing. Let me actually break it down here so it's easier for you to understand. Each investor starts with 5 million dirhams. So if you buy with mortgage, it's a 25% down payment. So let's say if each apartment is 1 million dirhams, you're going to pay 25% of 1 million dirhams, which is 250,000 dirhams, right? And 4.7% interest rate. So this means on every amount of money that you have to pay to the bank every year, you have to pay 4.75% interest, right? This is the bank's profit. And the mortgage is a 25-year term, and you have 5% fees, okay? And the buying window is 10 years. So this means for 10 years, right, you keep reinvesting every rental income that you make into buying more properties, okay? So guys, again, for simplicity's sake, this is what I've done. You may, stop reinvesting after year 2. So you reinvest every rental, income into buying new properties after year 2, or you may repeat it, after 30 years. Doesn't matter. Anyway, and appreciation and tax. So I'm calculating, 2% inflation rate on apartments. So every year the apartments go up 2%. So this is for the apartments. If you want to buy, let's say, more apartments after 1 year. Also for the rental prices. Rental prices also go up 2% every year because of inflation. Guys, I know Dubai is like this. COVID, it came down, went back up. War again down, now it's going back up, right? So, but on average, let's say a 20-year period, there is an average. I've calculated 2%, and we have 0% tax, so there's no issue regarding that. Now let me show you the 6 investment philosophies and mechanisms that you have. Investment number 1, you buy an apartment at a normal market price, right? Normal market price, whatever it is. You use mortgage and you do short-term rental. So guys, short-term rental is a mixture of short-term rental and mid-term rental. So this means you rent your apartment on a short-term basis. So for example, in high seasons like January or February, you get your guests coming for staying for a week. So you get a guest coming for a week, then another guest comes for another week. So guests move in and move out, right? This is on a short-term rental basis. And for summer season, like for example, when the weather is hot, you rent it, for 2 to 3 months. Okay, so this is a mixture of short-term rentals and mid-term rentals. And guys, For those of you that think this is a headache and you have to manage it, don't worry. There are management companies, so someone manages on your behalf if you consider to use this model. Investor number two, they buy an apartment like same thing on a normal market price, and they use mortgage, but this is long term. So you rent your apartment for 1 year. Okay, this is an annual contract. Investment number three, you buy a normal apartment using cash and use short-term rentals, right? Same mechanism as I told you here. So you're getting guests move in and move out. And a management company uses this basically strategy for you. So you don't have to worry about this. Number four, you buy a normal apartment using cash and long term. Okay, so guys, number 5 and 6, these are the ones I like. If you're not stupid and if you're smart, you're going to want to buy distressed deals. This means below the market price. You don't buy at a normal market price. You buy below the market price. And you have two strategies. Either, you buy mortgage or you buy cash. And the reason, I've listed short-term rentals for both of them, like short-term rentals and mid-term rentals, guys, if you buy distressed deals and you do short-term rentals and mid-term rentals, you can make a lot of money. So the thing is, when you get, people coming and staying at your apartment and they use it like a hotel, right? You end up making more money if you do a proper job. Like I would say 20 to 30%, sometimes even 40% more than long-term rentals. And guys, everything I tell you comes from experience. I've done both long-term rentals, I've done short-term rentals. And the thing is, if you have a bad management company, they end up losing you money and you make less than long-terms. But if you have like a good management company that knows how to market your properties, get the right prices, make sure it's in the right condition, then you end up making a lot of money. And guys, at the end of the day, we want to choose the right vehicle. What gets us from here to here faster? That's what we want to know. So I hear a lot of people, say a lot of stupid shit, like short-term rentals, oh, people party. Guys, are you 17? Stop the nonsense. They're like, yeah, there are 80% bad management companies that don't know how to handle and qualify guests. But if you want to act like an adult, then just find the right management company. That's my suggestion. Anyway, so here's the thing. I'm calculating a normal one-bedroom apartment is 1,920,000. And guys, again, this is an average, right? It could be in any area like Business Bay, Marina, downtown, right? So I'm just calculating a normal one-bedroom price that you will buy, right? And for distressed deals, here's what I'm doing. So guys, these are the strategies I like for distressed deals. So please pay attention. For distressed deals, you go and you find premium areas. Dubai Marina, JLT, downtown, Creek Harbor, Business Bay, and there are a lot of other areas like JBC popping up. I haven't personally bought in JBC, but I see a lot of people getting good results there, even though it's not expected. I didn't expect that, to be honest. But anyway, you find older buildings, like 7-8 years plus, right? So here's the pattern. In Dubai, when you buy a new apartment from the developer, right, during construction, it goes up, right? So as the construction. Here, the construction completes. When the building, becomes older, 7-8 years old, it drops. So it comes down. So here's the thing. You'll buy, an older an older tower compared, to a newer one, much cheaper. That's the interesting part. So you buy these older apartments, okay? And here's the thing. You don't even buy them at a market price. So let's say it's 1.1 or 1.2 for a one-bedroom. You buy them cheaper than the market, 900,000 dirhams, right? So you're already buying distress. And guys, a lot of you may say this is not possible. It's not possible for people that are not patient. I wait. I haven't bought in a couple of months. Now this conflict has kind of escalated the situation. So right now I'm investing. Yeah, you should be patient. Or when it's a seller's market or a buyer's market, you should pay attention. If sellers are willing to sell or not. Okay? You don't want to just start buying, but right now it's a good opportunity. Anyway, so here's the thing. I've broken down every situation. So here's the thing. With mortgage, using short-term rentals, if you buy a normal apartment, let's say 1,920,000 is the price of each, right? If you put 25% down payment, you will buy 8 of these one-bedrooms using mortgage, right? And 1 studio. So I don't want the money to go to waste. So this is the thing. And with investor and you will have control over 16.260 million in controllable assets using the mortgage, right? So 75% of this property valuation is already paid by the bank, and you should pay this in 25 years. And for this one, for the long term, it's going to be the same, right? And in real, like so you're gonna have 122,000 dirhams in your pocket after you buy these properties, and this is gonna be reinvested after year one. Anyway, for investment, number three, you're gonna, if you're buying in cash, you're gonna end up buying two of these properties with one studio. Same thing. If you're buying these with cash and you're renting them long term, same thing. Two units, one studio, right? You're gonna have 23,000 for each one, which you're gonna reinvest later on year one. Now here's the thing, on investor number 5 and 6, right? So if you buy distressed tools, here's the thing, guys. If you use mortgage, you can buy 18 units. If you pay in cash for these distressed units, you can buy 5 units. And here's the thing, you buy 18 units, right? 75% of this, which is going to be 21 million and 600,000, they're going to be paid for in 25 years. And guys, the reason you see this is more than usual is because we're considering you're buying this on a distressed basis. Basically, you're buying distressed units, right? And you pay for them; they're like below market price. So that's why you're making a premium, right? And guys, again, in situations like this, for example, right now, you will find people selling 5 units at a distressed price. So this is when you invest, okay? Now here's the thing. I'm going to show you exactly how much each one is going to make you. I've also made a chart for you so you can have an understanding of how much each one can make every month and how much you will get to keep. Anyway, let's start with investor number 1. So guys, here's the thing. The income of investor number 1. I'm just going to go back so you have an understanding. So investor number 1 uses mortgage and short-term rentals, right? And each apartment was 1,120,000, as you remember. So here's the thing, this is their net operating income, this is their mortgage payment. So they have to, they make this much and they pay this much, to the bank. So short term, like they're losing money, okay? And this is also their net worth, like how much, they have in equity. So I told you, about our family equity. This is equity, like how much we have, okay? So here's the thing. He has 9 units, when they rinse and repeat, this process, okay? This is how much they're going to make over, a 30-year period. So you can see I broken down the net worth. So in 30 years, right, if you keep reinvesting everything into your business, into properties, you're going to end up with 31 million dirhams. So you start, with 5 million dirhams, as mentioned. Okay guys, so for investor number 1, as mentioned, the net operating income on year 1, on all these 9 units, 8 1-bedrooms and 1 studio, is going to be 813,000 dirhams per year, right? After all expenses paid. And guys, by the way, I'm going to tell you exactly how much I've shown they're going to make. So for this, I mentioned 5% net profit every single year. That's how we're calculating it, 5% net profit. So they're going to, end up like after 30 years. So we stop reinvesting on year 10. After 30 years, they're going to end up, making 1,610,000 dirhams every single year, right? And their mortgage payment is going to be 112,196. I know I told you guys that after like 25 years, the mortgage will stop as well, right? So here's the thing. This is going to be, their debt left to the bank, and this is going to be their portfolio value, right? And this is going to be their net worth, 31,911,000. So you can see they started, with 5 million dirhams, and they ended up like with almost 32 million dirhams in equity. So I know what you're saying. Okay, this is 6 times your net worth, right? So you've like 6x your net worth in 30 years. Not that impressive, right? Okay, this is model number 1. Now for investor number 2, they kind of do the same thing. Guys, I just want to show you, this is what a lot of investors do. Yes, you're not going to end up, making a lot of money. You use standard, mortgage, and long-term. So you start, with the same amount of money, right? And you can see you make this much in income, and this is your mortgage payment. So this means you're even losing money on year 1 and 2. So for those of you that are buying stupid deals on mortgage, I want you to know for the first couple of years you're going to end up losing money. Doesn't matter, if you list it on short-term rentals or long-term rentals, right? And for this one, we're calculating a 4% net profit every single year for these long-term rentals. 4% net profit. So you can see, here's the thing. After 30 years, you're going to end up, having a net worth of $28,875,000, like almost 29 million dirhams. So slightly less than this. And this is after 30 years, right? So you're almost like 6x, same thing, but slightly less than 6x, right? And you can clearly see that you're making 1,155,000 dirhams a year in rental income, right? So here's the thing, guys. Investor number 3, they buy in cash. These guys end up making like almost nothing. So if you're buying cash using short-term rentals, guys, after 30 years, you're almost like less than triple, like 2.5x. Like it's almost nothing. It's not even worth it. After 2.5 years, like unless you use any strategy, it's just a safety net maybe for your kids, but you're not gonna end up making a lot of money. You're definitely not gonna be rich. That's what I'm trying to say. So you start with 5 million dirhams and you go to 11,760,000 dirhams after 30 years, right? And guys, I need you to remember, you stop on year 10. So you keep reinvesting until year 10, and on year 10 you start reinvesting into properties. You just collect your rental income. Now here's the interesting part. For number 4, cash on long term, guys, you're even gonna end up making less here. 4. As you can see, investor number 4, it's a cash and long term, right? And you can see the ROI is 4%. I'm comparing it to what we made here, which was 5% net, right? So here's the interesting part. Here, if you do keep in mind, we stop on year 10, you're almost gonna end up with the same thing. It's slightly less, right? But you're gonna almost be at the same number after year on year 30. And this is considering the 2% inflation on all of them, right? Now, guys, here's where you make shit tons of money. I told you, you buy distressed and use mortgage on a short-term rental basis. So, guys, so here's the thing. You buy 21 units, right? On year 1, you make 1,458,000 in income, and your mortgage payment is 840,000. You bought distressed deals, and you're making money on year 1, rather than losing money. So here's the thing. This is your debt, to the bank when you buy. This is your portfolio value, and this is your net worth, like how much equity you have, without owing to the bank. And guys, on year 10 alone, you're gonna have 57 million dirhams in equity. And remember, you started with 5. So this is why the compounding effect is huge, guys. I need you to remember, you need to, buy distressed deals. If you don't buy distressed deals, this strategy is not gonna work. So on year 2, year 3, year 4, year 5, year 6, right? You only buy distressed deals, and this means you have to buy a couple of good deals every single year. I know this math is going to be very difficult, some in a lot of cases to implement. But guys, everything is difficult. Is it possible? Of course it is. Is it easy? No, it's not easy. You're going to have to find distressed deals every time. And this means you have to be in contact with a lot of brokers to accomplish this. But anyway, on year 10, you end up with 57 million dirhams. On year 30, you have 135 million dirhams. So this means you went from 5 million to 135 million. And guys, for people that say this is not possible, just remember there are a lot of people that have used these strategies in the U.S. and Europe, in a lot of different countries, to achieve this. Okay, so if we go to investor number 6, here's the thing. Now they buy distress cash on a short-term rental basis, right? So if you buy distress deals on cash, you can make good money, but still not that much, right? So you end up making 25 million dirhams in net worth if you buy in cash. Okay? And here's the thing. Investor number 5 wins compared to even investor number 4, 3, 2, and 1. So if you buy distressed deals and you rent them on short-term rentals, you win by a lot. because of the compounding effect as well. 135 million dirhams. That's 5 multiplied by 26, 27, 27x, right? So guys, the main strategy to achieve this is buying distressed deals on short-term rentals. And if you have any questions, whatsoever about this strategy, then do message me here. I've been using this strategy myself. Mainly, I myself have bought in cash, but the reason I bought in cash is because I wanted to build a strong foundation, so I can go to the banks and refinance my properties. To be very honest, mortgage in Dubai without any investments or a huge amount of income in Dubai. So this is very important. If I have like $10 million a year in revenue in a different country, not Dubai, it's gonna be tough. You need to have income in Dubai and investments to be able to achieve this. So this is my plan as well. And for those that are interested, as an investor, you can just message me so we can discuss maybe buying and finding properties together. Okay. For now, guys, ciao.